Welcome back to Boni's Life, where we break down the crypto markets with intelligence, insight, and just enough humor to make the volatility bearable. I'm your host, Boni, and today we're diving deep into the past 72 hours of crypto market action, with special focus on the last 24 hours. Bitcoin has been consolidating after hitting an all-time high of nearly $112,000 last week. And the question on everyone's mind is this exhaustion before a drop or the calm before another leg up? By the end of this episode, you'll have a clear strategy for navigating these waters, whether you're a beginner or advanced trader. Let's start with the numbers. The global cryptocurrency market currently sits at $3.55 trillion, down 2.64% in the last 24 hours. Bitcoin is trading at around $108,500, Ethereum at $2,640, and XRP hovering at $2.30. The market's been acting like someone who just ran a marathon and now needs to catch their breath. After Bitcoin's sprint to nearly $112,000, we've seen a natural pullback and consolidation phase. This pattern is actually quite normal in bull markets. Assets rarely move in straight lines. What we're seeing is a classic bull flag formation, which typically resolves in the direction of the prior trend, but not always, which is why we need to look deeper. What's particularly interesting is the divergence between retail and institutional behavior. While some retail traders are getting nervous, institutional money continues to flow in. Bitcoin ETFs pulled in $5.77 billion in May alone, their best performance since November. This dichotomy creates an interesting market dynamic that we'll explore throughout this episode. But first, let's dive into the technical picture to understand exactly where we stand. Starting with Bitcoin, we're currently seeing several key technical indicators flashing warning signs of short-term exhaustion. The RSI, or Relative Strength Index, is reading 64 after being rejected from overbought territory at 70. The MACD has shown a bearish crossover, suggesting potential downward momentum in the short term. It's like Bitcoin went to the gym, did a heavy workout, and now needs to rest before it can lift again. The question is, how long will this rest period last? The key support level to watch is $106,406. This level provided support during Saturday's dip and represents a critical threshold. If we break below this level decisively, we could see a deeper correction toward the psychologically important $100,000 level. On the upside, the previous all-time high, around $111,980, serves as immediate resistance. A breakthrough above this level could trigger a move toward $115,000, where analysts note potential invisible hand resistance and eventually the psychological $120,000 level. Shifting to Ethereum, the technical picture shows ETH approaching a critical resistance level at $2,724. After finding support at its 200-day EMA at $2,451 on Sunday, Ethereum has recovered about 5%. Ethereum's RSI sits at 66, also rejected from overbought territory, but still showing relative strength. The key level to watch here is $2,724. A breakthrough could trigger a run toward $3,000, while rejection could send ETH back to test its 200-day EMA. XRP is in a more precarious position, consolidating around its 50-day EMA at $2.30. The RSI at 48 is below neutral and pointing downward, suggesting bearish momentum. A decisive close below $2.23 could trigger further downside toward $1.96. What's fascinating about these technical setups is how they're all at critical junctures simultaneously. This synchronicity often precedes a significant market move, which is why the next 24 to 48 hours could be particularly telling. Now, let's examine how global events have been shaping the crypto market over the past 3 days. The most significant development has been former President Trump's comments about reviving trade war policies, which sent Bitcoin tumbling below $109,000. This immediate reaction demonstrates crypto's increasing correlation with global macro factors. It seems crypto traders now need to be geopolitical analysts too, as if technical and fundamental analysis weren't enough to keep us busy. Another major event was Trump media's announcement of plans to buy $2.5 billion in Bitcoin. This represents a significant institutional buy signal and reinforces Bitcoin's narrative as a corporate treasury asset. We're also seeing interesting regulatory developments. The IMF announced efforts will continue to ensure El Salvador doesn't accumulate more Bitcoin despite a $100 to $20 million payments deal. Meanwhile, Senator Lamis commented on the difficulties pushing stablecoin legislation forward, saying, "I had no idea how hard this was going to be." On the security front, Sui Network's biggest liquidity provider, Cetus, was hacked for $223 million, causing Sui-based tokens to plummet. The network is stepping in to compensate losses in full, but this highlights the ongoing security challenges in rapidly growing protocols. What's particularly interesting is how these seemingly disparate events create an interconnected impact on the market. Trade tensions affect risk appetite, which influences crypto prices. Institutional adoption improves legitimacy, which reduces risk premiums. Security incidents drive risk assessment, which leads to market segmentation. Let's now turn to what the experts are saying about the current market conditions and what might lie ahead. Keilu, CEO of Hashkey Ecolabs, notes that institutional investors are increasingly reallocating into crypto after volatility shook traditional safe havens. This speaks to the growing perception of Bitcoin as a legitimate alternative asset class. Augustine Fan, head of insights at Signal Plus, maintains that the structure underneath remains strong. Positive macro headwinds and better underlying structure paint an optimistic outlook, with traders expecting prices to grind towards new highs by the summer. Not everyone is quite so optimistic, though. QCP Capital reminds us that last year's Trump keynote in Nashville caused a spike in one-day implied volatility above 90, followed by a 30% Bitcoin drop. That memory is still informing positioning. Sometimes in crypto, history doesn't just rhyme, it repeats with a vengeance. Standard Chartered Bank has one of the most bullish outlooks, predicting Bitcoin could reach $200,000 by the end of 2025 due to continued institutional demand. Meanwhile, analysts trading short projects Bitcoin could reach $134,000 in the near term, as long as it stays above the $90,000 support level. The Bitcoin therapist made waves on social media with a bold prediction of 120K Bitcoin by end of week, though this received mixed reactions due to the lack of supporting analysis. As one commenter noted, price predictions without context offer limited value. What's fascinating about these diverse perspectives is that they all acknowledge the same market conditions but arrive at different conclusions based on which factors they weigh most heavily. This divergence of expert opinion often occurs at major market inflection points. Now, let's translate all this information into actionable trading strategies for both the short and medium term. For the short term, the next 24 to 48 hours, Bitcoin is likely to remain range-bound between $106,400 and $111,000. The key level to watch is 106,406 support. A decisive break below this level could accelerate the correction, while a break above the previous all-time high could signal continuation. For Ethereum, the critical resistance is $2,724. A breakthrough could trigger a run to $3,000, while rejection could see a retest of the 200-day EMA. XRP traders should consider defensive positioning with a stop loss below $2.23. Remember, in crypto, sometimes the best trade is no trade at all. There's no shame in sitting on the sidelines during periods of uncertainty. Your capital preservation skills are just as important as your profit-making abilities. For the medium term, the next 1 to 2 weeks, consider an accumulation strategy on Bitcoin dips to the $100,000 to $105,000 range. Ethereum could outperform if it breaks 2,724 convincingly. For altcoins, be selective and focus on Layer 1 protocols with strong fundamentals and minimal security concerns. There are several risk factors to monitor closely. The upcoming Bitcoin conference in Las Vegas, which has historically been a volatility catalyst, further trade war developments, regulatory announcements, particularly regarding stablecoins and ETFs, and additional security breaches in major protocols. What makes this particular market juncture fascinating is the tension between technical exhaustion signals and strong fundamental adoption narratives. This creates a market environment where both significant upside and downside scenarios remain plausible, requiring traders to be particularly nimble. Remember to always use proper risk management. In volatile markets like these, position sizing becomes even more critical. Consider reducing your standard position size by 25 to 50% until directional clarity emerges. To recap, we're seeing a market in consolidation after a significant rally, with technical indicators suggesting exhaustion but fundamental factors remaining strong. The next 24 to 48 hours will be critical in determining whether this is merely a pause before continuation or the beginning of a deeper correction. The 3 key takeaways from today's analysis are: 1. Watch the 106,406 support level on Bitcoin closely. It's the line in the sand between a healthy consolidation and a deeper correction. 2. Monitor institutional flows through ETFs. They've been the backbone of this rally and will likely determine its sustainability. 3. Stay alert to geopolitical developments, particularly around trade tensions and regulatory announcements, as they've shown immediate impact on crypto prices. And remember, no matter how sophisticated our analysis gets, the crypto market always finds new ways to surprise us. That's what makes it both frustrating and fascinating. If you found this analysis helpful, please hit that like button, subscribe to Boni's Life for more intellectual crypto content, and share this video with fellow traders who might benefit. Drop your thoughts in the comments below. I'm particularly interested in hearing your price targets for the weekend. As always, this content is for educational purposes only and not financial advice. Trading cryptocurrency involves significant risk, and you should never invest more than you can afford to lose. Until next time, this is Boni, helping you navigate the crypto markets with intelligence and insight. Stay curious, stay cautious, and I'll see you in the next episode.